March 21st, 2024, uh, it was a big day for Dow Jones. The first time in history of Dow Jones, in its 128 years of history, the Dow Jones was near 40,000 threshold, 40,000 points. And so it must be a really awesome feeling for investors that we're reaching the heights of the stock market. And if I look at the graph below, in the 1 year run up that we have seen, the Dow has climbed from 32,560 to 39,781. In a year span of time, it has gone up by 7,220 points. That is a huge change. That is about, 22% return year over year. So the question then becomes that is the US stock market, as we are reflected by the Dow Jones Index, is that really a very bullish market? And is everything okay with the stock market? Is it really demonstrating that the US economy is on a bull run and everything is well? So let's dissect that and let's try to understand what these numbers really mean and whether that is some time for us to discuss and reflect is the right time to invest in stock market or not. Now, if you look at it, this optimism that we are talking about, this Dow Jones Index climbing, people are optimistic. Yes, there are wars going on somewhere, and we have got, elections coming, the inflation still not tamed, but who cares? We are in the age of AI. We are going to have AI solve all our problems. Or maybe it's that we are back to the same age old investor. We are all very optimistic. It's irrational exuberance. Maybe both combined, or maybe there's something else. Maybe that what you're looking at is deceiving. And let's look at this third factor we call it deceiving factor for Dow Jones Industrial Average. How is this really this index built up, and what is this telling us? If you look at this big term, Dow Jones is a price weighted index. Well, what does that mean? It means that Dow Jones, the index provider, they select 30 top companies. These are leaders in in different sectors of the industry in the economy, and they select these stocks, which are numbers than 30 of them. And every day they basically add up the price of those stocks and divide it by a Dow divisor. We'll talk about the divisor later in a later video, but it is all about you add up the stocks, divide by a number, you get a metric, which is called the Dow Jones Index. Now, it doesn't talk about, the biggest thing about this limitation of this index is that if you have a few stocks which have high prices, if they move just by the math, the index moves significantly. And we're going to show that this 7,000 point increase year over year is actually basically determined by few of the stocks and these 30 stock choices that is driving the change. So let's dive deep into it. Uh, Here I'm showing those 30 stocks. If you can look at the list of those, and you can look at it as a cross section of the US economy, and it represents all the big guys. Now, as I go back to this slide, uh, where you're looking at, I made an approximation. Like if we had known which stock, and we know that for now, that which stock moved what, and how much it could have changed the Dow Jones. In a simple model, when I looked at it and I built the model, six stocks. Microsoft is the leader. Microsoft, Caterpillar, Salesforce, hmm, Home Depot, Goldman Sachs, and of course Amazon. These six, golden stocks for lack of better words, they are driving up about more than half of the 7,000 point increase, which is about 4,500 points. That's huge. So six stocks basically driving up close to two-thirds of the change in the index. Now, let's look at one more round of stocks. And then if I choose the next five stocks that have high stock prices and have moved significantly year over year, you have got the JP Morgan Chase, you have got the IBM, American Express, Visa, and Travelers. If you look at it, other than IBM, all of them are financial stocks. And these five are driving about 2,000 points. So think about this. So out of 30 stocks, we've got six stocks that drove up about close to 4,500, and then five more stocks drove up to another 2,000. So basically, the story is that the 7,000 point increase is basically being driven by these 11 stocks. There are other stocks that have moved too, and the 19 of them. And of course, we explain the differences, but 11 stocks cannot reflect the economy. And when I look at the economy in a broad swath, I would like to guys a quiz. There might be about close to about 8,000 stocks. So I'm not going to say that just because there's 11 stocks move so significantly, all is well with the economy, all is well with the stock market. Factors such as company earnings, market sentiment, economic shocks, you know, how the competition is doing, all these things matter. So just looking at this Dow Jones climbing going to 40,000, that is not be a only one reliable indicator of what is driving the economy and should we invest in the stock market or not. So that's the word of caution. I'll end with it. Thank you again. Bye.